Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is discontinued operation. What is discontinued operation? Well, a company decides to sell or dispose of a component of their business. So first of all here, sell or dispose a component or more than one company, but not their whole business. Profits from this discontinued operation will not continue. So we cannot have this one in the future. So we need to report it in a different way. And when they are reported, when a component of an entity or group of components has been sold, disposed of, or is considered held for sale. So I don't need to have it sold yet, but held for sale. And disposal represents a strategic shift that has or will have a major effect. So it must be material on a company's operation and financial results. Income or loss from discontinued operation is reported separately below income from continuing operations. For instance, Target in 2014, when they decide to close their operations in Canada. So let's check how they report it. And only a huge disclaimer here. This is a public form. That is the 10K of Target, and it is available on their website. And if you want to have it, the link is in our video description. Okay, so no classified information here. So we have the income statements, or what they call it, statement of operation, sales, cost of sales, and go. Net earnings from continuing operation, 2.5 thousand here, but it's in millions, but let's go to 2.5 thousand or almost. Then right below it, discontinued operation for $4,000. So it moves from and net earnings from continued operation to discontinued operation net of tax. Some companies they report it uh, right after operational income, but usually is below net income. Okay, and then discontinued operation and net loss here. So it moves from a net earnings to a net loss. So for 2015, probably Target will be profitable because the continued operation will remain, but this discontinued operation not. Okay, guys. So how do we record it? How do we report it? When the discontinued component is sold before the end of the reporting period, that is how it usually happen. And here is sold. The income effects will include income or loss from operation of the component from the beginning of the reporting period to the disposal date. And if it is only held for sale, we report only this topic here. However, when we sell it, we have gain or loss. So we also report the gain or loss. So let's go to our Excel file to check it. So what do we have here? We have here income from continuing operation and discontinued operation and net income. Just like Target here, that is the most usual way. So in April 2020, April because my birthday is on April, management of Scarpin Corporation, my fake company, decided to sell one of its divisions that qualifies as a separate component according to generally accepted accounting principles. So it is material. Okay, so we need to report it. The division was sold on September 12, 2020. That is the day that I am recording this video. Considering the following facts related to the division. From January 1st through disposal, the division has a pre-tax loss from operations of $8 million. So here, this operation here, the loss is $8 million. So negative 8 million. The assets of the division had a net selling price of $25 million and a book value of 20. We sold it 25, book value 20, so we have a gain $5 million. Starting in beginning with after-tax income from continuing operation of $38 million. So $38 million here. And we assume a 25% tax rate. And about the tax rate, you need to check your local law if you are not in the US, if you have income tax benefit when you have loss or not. Okay, here in the US you have it, but there are some countries that they don't. So check your local laws if you are not from the US. Okay, so we have here this data. So how do we report it? Income from continuing operation 38, and we need to find the loss on discontinued operation. How do I know it is a loss? Because here we have a loss 8 million plus gain on disposal 5 million. So the loss will be the sum. The loss from operations of discontinued component, including gain on disposal, $3 million. However, we have the income tax benefit. And then the income tax benefit negative loss times our tax rate 25%. And why it is positive now? Because the income tax always has the opposite sign of the gain or loss, or income or loss. Okay, so if we have income, income tax is an expense. If we have loss, income tax is a revenue. So the loss on so here the loss on discontinued operation. Oh, here, sorry. Let's put it here. Let's make it beautiful. Okay. Now we are good. So here times 25%. And now our loss will be the net loss. So the loss considering the tax. So if we go back to target here, net of tax. So if it is net of tax, we need to deduce our tax. So the net loss on discontinued operation, it will be 2 million and a quarter. We have an income of 38, so our net income will be the sum. So our net income will be $37,750,000. Okay, guys, so that's it. Thank you so much. Please subscribe our channel. You will be the first one to know when a new video arrives. Like our Facebook page, Accounting Hub by Dr. Scarping. If you have questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.